Welcome back to the CryptoFather channel. Today is the 20th of November and it looks like the crash, the crypto winter is finally here. It's hard to admit, but I fear that it may be over and I'm having a hard time realizing this. I think I'm in a complacent mode right now, but gotta admit the facts. I think the game is over for the time being. I'm gonna look at the charts today. I'm gonna look at the markets charts and then we'll jump into articles. But before I do all of that, just a quick announcement. The dcent wallet is having a Black Friday sale. A massive sale is coming up with 40% discounts. So I'm going to just briefly bring that to you right now. Dcent is going to have a sale starting on the 20th, which is today at around midnight. When you go onto when you follow the ref link below the video, you will get to a web page. And it will look like this. With a 40% discount, you're going to save $129 on the purchase of two of these bad boys. That's starting at 0 UTC. This sale is going to last for 14 days, starting today and going on to December the 3rd. You'll be able to pick up two of these wallets for the price of barely $189. If you purchase one of them, you're getting a $30 discount on the CryptoFather channel with the ref links. That's starting with the next few hours. This is a great opportunity to pick up one of these wallets at a massive discount. This is the biggest deal of the year, the biggest sale of the year that they have, and it happens for a very limited time. So if you are still looking for a biometric wallet or just any crypto wallet to store your crypto in, this is the time. And it looks like you may need to pick this up because the market's crashing and it's best to either sell your stuff if you haven't done so yet or move it off the exchanges and keep it on the biometric wallet from dcent, because the bears are here, boys and girls. So once again, if you pick up two of them with the ref link below, you can get them for $189. That's a 40% discount. If you buy only one, you're still getting a massive 30% discount for $109. You can have one of these puppies. This is going on for the next 14 days until December the 3rd. So don't wait, scoop it up and get yourself biometricized on the wallet. So on to the markets, the market cap. Let's refresh this page because this is from yesterday. Bitcoin dominance fell from almost 58 to 56.7. Let's refresh this. We're presently sitting at $3.1 trillion. Bitcoin dominance has increased a little bit, but $180 billion in trading volume. Bitcoin dipped below $88,000, I think. Right now it's $90,000. Ethereum at $2,900. BNB 894, Solana 135, Cardano at 45 cents. Miserable. You know, looking at these prices here, it doesn't look too bad just yet, but we're gonna look at the markets. We're gonna look at the charts in just a second. Zcash still pumping with a 23% pump on the 7-day at 657. So while everything's dumping, Zcash seems to be pumping, but I assume that's temporary as well. Litecoin at $91, Monero 368, Polkadot is at $2.67, and Toncoin at 173. Meowcoin keeps pumping up and down. Right now it's sitting at, let's refresh the page for this one as well. Right now it's sitting at quadruple 08. So Meowcoin pumped to almost to triple 1 and then dumped again. Right now this is where we're sitting. On the charts, Bitcoin, I was drawing up some indicators. Looking at crashes. Actually, let's go to the big screen. Looking at the crashes here. 2007, 2021, 2017, I guess. Let's have a look at 2017 because why the heck not? 2017 saw a crash, a correction of 84% in Bitcoin. That's 84%, and this lasted an entire 14 months from the top to the bottom. 84% correction, 87% correction. In 2021, we saw a massive correction of 78%, and the time frame for this was 14 months, so a year and a bit before we saw another rally back up. 395 days. This time around, we have reached it seems like we've reached the top right here. And so if we were going to experience a similar crash to that in 2021, we would be looking at a Bitcoin of $27,000. If we're going to see it drop further to the 80s, like we saw in 2017, 87% would bring Bitcoin back down to $17,000. But I think we agree on the point that this will probably not happen. We're not going to see Bitcoin dump down to $17,000. If it does dump to $27,000, that would be a massive surprise. That will probably also not happen. So we may see Bitcoin retrace all the way into the 60s. That would be a possibility. $68,000, somewhere within this vicinity. But the prediction is that this might take us another 18 months, which would take us all the way down to 2027. So this is what we may be looking at. Right now, on the monthly, this is the biggest red candle that I've seen in a very long time. And if we go to the daily, actually, let's stay on the weekly. On the weekly, Bitcoin right now is bouncing off the support here at the high of 88,000. So Bitcoin dipped down to 88,000 and neatly touched this level and bounced back up. Now, will it sustain itself? That's hard to say. Most likely not. I mean, I don't want to sound too bearish, and I'm probably the most bullish person there is, the most hopeful, and therefore the most naive. But I don't think that this is going to sustain itself. I hope that we're going to see a bit of a rally sometime into early December, and because we did have 4 red weeks, the entire month of November has been red. Starting October, the sales began, and we went into the month of November. So I hope that we're going to see a rally towards halfway through December, quite possibly into 100,000. But then I fear that we're going to see this retracement go down and Bitcoin dump below the $75,000 mark, which is somewhere where 75,000. Yeah, it would be somewhere around here, which would be at the bottom of this rally here in April of 2025. So this is where we could go see, after which, and I think this could drag on all the way for the next 18 months. We could see this play out all the way till 2027, after which we would probably see a massive rally of market going, capital being deployed once again into 2028. And then we could see Bitcoin rally to $157,000. Now, I know that a lot of people were expecting Bitcoin to make gains, quadruple this, because we had it here at 60,000, 68, and so everybody was talking about. I mean, the price doubled, essentially. It doubled, because the gains we went from 19 to 67, and then people expected a similar increment, but we doubled. And the next bull run, we could see Bitcoin go all the way to $150,000. But I think for the time being, we are looking at a retracement down to the 60s, 70s, 60s, and it's going to happen within the next year. I think the sentiment is, for the most part, that we're going to see a bear market. The 4-year cycle still holds, and we're going to see a retracement. But I do hope for a relief rally over here, at which point I think I'm going to throw in my chips and not sit through yet another bear market. Bitcoin slides below 90,000 as crypto correction becomes one of the worst since 2017. Wrong. That is incorrect. It is not the worst since 2017. We had a correction of 78% in 2021. In 2017, yes, okay, it is the worst since 2017 because it was 87. In 2021, it was pretty bad as well. But right now, we're seeing a retracement. It is not the worst. It is at 29% right now. We had 32% just a few months ago in February, and before that, in June of 2024, there was another retracement of 33%. So right now, we're not that poorly off, really. It's only 29%. So comparatively, this is not the worst slide. The worst one was in 2020, 21. That would have been the worst retracement. Yeah. So articles like that, forget it. Becomes one of the worst since 2017. Incorrect. That is not the worst. Bitcoin traders now see 50% chance of Bitcoin falling under 80,000 in 2026. Here's why. Bitcoin's macro thesis collapsed as rate cut expectations fell and real yields stayed high. Institutions rebalanced out of spot ETFs while long-term holders sold 815,000 Bitcoin. Without new buyers, Bitcoin is drifting toward deeper support near 80,000. Bitcoin has spent the past several weeks grinding through one of the most persistent declines in years. The drop has erased hundreds of billions in market value, pulling Bitcoin far below its October all-time high of 126,000 and dragging sentiment into deep uncertainty. Traders are still searching for the real cause of this sudden reversal, and according to crypto analyst Tracy Schuchard, the answer isn't one trigger, it's a chain reaction of macro shifts and structural selling that hit all at once. And it looks like a lot of money on Wall Street is being unwound, and so this cascade is going to continue as more and more liquidations continue to piling up and more money is taken out of circulation. Because remember, we're no longer only in retail world where retail and whales are pumping money into crypto. There is a lot of traders who are trading both cryptocurrencies and the traditional stocks, which means that the money flows from one to the other. And so the liquidity that has been pumped into cryptocurrencies is divided between crypto and traditional stocks. Sukard explains that Bitcoin's breakout from 40 to 126,000 rallied almost entirely on a single dominant narrative, a Federal Reserve easing cycle alongside heavy institutional demand via spot ETFs. Rate cuts were assumed to be a given, liquidity was expected to expand, and institutions were projected to absorb supply throughout the year. But when the Federal Reserve abruptly reversed course, expectations collapsed. The likelihood of a December rate cut plunged from 90 down to 40%. Real Treasury yields stayed above 5%, and a strong dollar environment returned in full force. The moment the macro thesis died, Bitcoin's valuation near six figures became hard to justify. Institutions responded immediately. ETF outflows. There was a bunch of ETF outflows which had been absorbing supply all year began outflowing instead. More than 1.1 billion left the ecosystem in days, not from panic, but from systematic rebalancing. Then long-term holders, addresses that accumulated Bitcoin between 40 and 80,000 began distributing aggressively. Once volatility returned, unloading 815,000 Bitcoin within 30 days. And so now Bitcoin is most likely drifting towards 80,000. We are presently sitting at 90,000, and it's quite likely that if Bitcoin does break below this level here, that is held up by this tiny little candle right here. Actually, this was tapped twice here in March 2025 and March 24th and March 31st on the two weekly candles. If this support breaks, we could see Bitcoin cascade down further into the 80s, which would be somewhere here, 85, and quite possibly even further down. I mean, historically, we did see Bitcoin break close to the bottom, to the previous bottom. So in 2017, the bottom was obviously here at $2,000. After the 21 crash, Bitcoin slid down all the way to $15,000. And right now, Bitcoin went up to 125,000, 126,000. So this was 78% correction. If we saw a similar correction of 78%, like I said, we would see Bitcoin quite possibly retrace into the into the 40s, 20s, 78. Let's say that there's a diminishing, so let's say it retraces about 70%, maybe, okay, let's say 65. We'd be looking at a $42,000 Bitcoin, although Plan B is saying that the bottom line is at 60, so we could see Bitcoin drop down to 60,000, which is still a massive drop of about 50%. So I do hope that there's going to be a rally, relief rally into December. Bitcoin is testing lower support as the downtrend deepens. Bitcoin briefly dipped below 90,000 on November 18, touching 89 before bouncing to the 91 range. The downside probe signals the market is already searching for deeper support, and the next major zone sits around 80,000 until the macro environment improves. Or natural demand returns, the trend remains vulnerable to further unwinding. Here's the reality traders must face. Bitcoin is no longer pricing in the dream scenario, it's pricing in the new macro backdrop. BlackRock's IBIT records historic 523 million outflow amid Bitcoin volatility. This is just from today. November sees 5 consecutive days of net withdrawals despite Bitcoin trading above 85,000. BlackRock's spot Bitcoin ETF experienced its largest single-day withdrawal. The withdrawal occurred during a period of elevated market uncertainty. Ooh, and there's an interesting tidbit. Peter Schiff calls strategy a fraud and challenges Saylor to debate. Usually, I think he was a bit hesitant about debating anybody, and now he's calling Saylor for debate. That's pretty good. This should be interesting. Investors remain near entry points. Analysts suggest that selling pressure originates primarily from sources outside ETF products. The magnitude of Bitcoin's price decline exceeds the proportional outflows from exchange-traded funds. This pattern suggests that broader market dynamics are at play beyond ETF redemption alone. Traders have noted the disconnect between price action and fund flows. Bitcoin's climb above 93,000 failed to stem the withdrawal tide from IBIT. Traditional correlations between asset appreciation and fund inflows appear temporarily disrupted. Zcash keeps rising as Bitcoin falls, and this treasury firm just bought more Zcash. The Winklevoss-backed Cypherpunk Technologies just topped up its Zcash treasury, with the privacy coin rising another 31% in a week. Will this sustain itself, or is it just like a rally before the crash? I mean, this could be the single-handed alt season for Zcash. Zcash being the only altcoin that is leading the rally of the post-collapse, post-bear market collapse. US cancels October jobs reports, making Fed's December rate cut odds surge, apparently. So this article says that the odds of the rate cuts in December have increased. The Bureau of Labor Statistics will not release the October jobs report because the shutdown stopped all data collection. The October payroll numbers will be folded onto the November release on December 16th after the Federal Reserve meeting. Few minutes showed officials split on whether to cut rates again, with disagreement over the labor market and inflation. The agency said the October payroll count will now be bundled with November's release, and it made clear the October unemployment rate won't show up in that report either because the data could not be collected. With no October jobs data, the several Fed officials leaning hawkish in recent comments, traders pushed up the odds that the Fed holds its benchmark rates steadily. By midday Wednesday, the CME Fed Watch tool showed a 63.8% chance of a rate staying at 3.74 to 4. That was near 50% earlier in the day. Fed Chair Jerome Powell, speaking after the meeting, told reporters a December cut was not a foregone conclusion. Before, Powell said that traders were almost certain there would be another cut at the December 9 to 10 meeting. By Wednesday afternoon, that probability fell to below a 1 in 3 chance. Bitcoin extends losses below $89,000 as Fed minutes outline two-sided risks, no present path for rate cuts. Bitcoin sits roughly 5% below its 2025 open, and analysts say market positioning points to further downside. Minutes show one of the widest policy splits in years, with Fed officials divided between further easing and holding rates steady amid stubborn inflation. Fed Chair candidate Kevin Hassett backs Trump's 2,000 tariff stimulus idea, which is nice, but when will that come? Who knows? So it feels like all of these articles that are still kind of positive are just there to keep the money in the system, despite the fact that smart money has already exited the markets, and it's just retail and hopium that is keeping some of it alive and is preventing the market from a massive crash. Fidelity Solana ETF records 2.1 million inflows on first trading day, and this is just 2.1 million. So this is nice for Fidelity Solana ETF, but I mean, what is 2.1 million is a tiny little drop in a massive bucket of otherwise huge outflows. Bullish Q3 earnings post record profit, yet shares drop 5% despite record Q3 results. Plus, new options and US launch bullish dropped over 5% below its IPO price because we are in a bear market. Strategy continues buying more. We're going to take a screenshot of this just to keep it safe. Here's our screenshot of Strategy a few days ago. So Strategy has purchased another over 8,000 Bitcoin. So he keeps accumulating. His average price market, where is it? His average purchase price, I think, is at about between $75,000 and $80,000. So he's still in profit. Once again, one quick reminder, Black Friday sale starts tonight. Within the next few hours, when you go follow the ref link below the video, that should take you to the CryptoFather page for the wallets, and it should look something like this with the discount. Right now, it isn't yet, but within the next few hours, it will switch to this. And you'll be able to pick up the wallet at a 40% discount if you purchase 2 of them, and a 30% discount if you buy 1 of them. This event lasts 14 days, so I strongly encourage that you pick up some wallets right now, because this is the best time to buy them. Christmas presents all in one with fantastic deals. So get that done. Do remember to smash up the likes on this video, subscribe to the channel, and come back tomorrow. Tomorrow I'll be sitting down with Kevin and we'll be talking about Palladium exclusively. So I'm going to interview Kevin on the topic of Palladium. We may touch a little bit on Trade Ogre, but the focus will be on Palladium, and I want to drill his brains on what Palladium is, where it's going, what the potential is for the token. So that's tomorrow, exclusive interview. Come back then. In the meantime, have a fantastic Thursday. And watch the charts, man. Watch the charts. Peace.